Hello, everyone, and welcome to the DebtCircle podcast, India's only dedicated platform for debt market. I'm Leelavati Shetty, your host for today's episode of Beyond Dalal Street. Dalal Street is more than just a street. It represents ambition, opportunity, and the financial aspirations of millions of Indians. But as India's financial ecosystem evolves, an important question emerges. What lies beyond Dalal Street? So, today we'll explore a financial landscape that extends beyond traditional equity markets and discuss one of the most significant developments shaping India's future as a global financial hub. India is no longer just participating in global finance, it is helping shape it. At the center of this shift is Gift City, Gujarat International Finance Tech City, a financial ecosystem designed to connect India with global capital markets. From international banking and debt markets to offshore finance and global investing, Gift City is fast emerging as India's gateway to global finance. In today's episode, we will explore what Gift City is, why it matters, and how it could influence the future of India's financial sector. At Debt Circle, we have been closely tracking the evolution of Gift City and recently launched a dedicated vertical focused on this rapidly growing ecosystem. So it's a privilege to have with us someone who has played a key role in its growth and development, Mr. Vijay Krishnamurthy. Managing Director and CEO of India INX, India's international exchange based in Gift City. Mr. Krishnamurthy, welcome to the podcast and thank you for being with us today.
Thank you so much for having me around.
So, sir, for someone hearing about Gift City for the first time, what is it really about?
So, if I was to say what Gift City is, it's an international financial jurisdiction, very similar to the ones like the Singapore, the Dubai, the London, the Luxembourg. And it's a very uniquely positioned financial service center, I would say, because it is an international financial center within the mainland of India, which has a very thriving domestic market as well as an international ecosystem. Now, why this came into the being? So, the story goes that our Honorable Prime Minister, when he was the Chief Minister of Gujarat, was on a tour to Singapore, and there he realized that there were several Indians who had set up a shop there and they were doing business from there. So, that actually triggered the thought as to why these Indians are actually setting up a shop there and not within the Indian shores. And that actually mooted the idea for the GIFT IFSC in India. And that is when all of these things that is available in other global international jurisdictions, which is more tax efficiency, ease of doing business, a unified regulator, all of these things have been set up in GIFT IFSC. So if you look at in a very nutshell, it is basically also a way to say that Indians can really set up a shop in an international jurisdiction within the country and do business from within the Indian shores internationally. So that's going to be one of the very key advantages for somebody to be there and GIFT IFSC and do the business there. So in a nutshell, it's an international financial center, the likes of Singapore and Dubai.
So, one thought gave birth to Gift City.
Yeah, one thought. Actually, it's always the seeds are sown with one small
Yeah,
idea and
yes.
then it grows. If you look at it, it's been a long journey. It started in somewhere in 2010, 11, and then 14. It started fructifying, and then 17. Our exchange came into the being. We were the first exchange to set up a shop there, which was again inaugurated by the Honorable Prime Minister of India. And he had set out very clear two visions, saying that GIFT IFSC needs to be price setters for one of the key commodities which is traded across the globe, and also it has to be a financial center or a financial hub where capital could be raised by global firms as well. So these were the two very clear visions that he set out when he was inaugurating the exchange at GIFT IFSC, which is India INX, which is again a BSE company, right? Which is more than 150 years in the domestic market. So we are an international wing of BSE.
So, what was India losing before Gift City actually existed? And where does India INX fit into that vision?
So I would rather say that GIFT IFSC has now actually thrown open India to the globe. One, because also with to realize our dream or Honorable Prime Minister of Viksit Bharat of 2047, which is capital is very important. And of course, we are raising capital domestically, but also what is going to be the flow of the international capital is going to be very, very important. So GIFT IFSC plays a very, very important role, that perspective. That's number one. And India INX being an exchange, it helps in this entire ecosystem because we are an exchange. So capital raising becomes far more easy, be it equity, be it debt, or be it trading in some of the contracts, which is the Sensex derivatives contract, or coming out with some other tradable products. So an exchange always plays an important role, and especially from a capital raising perspective, it plays a very, very important role because then when a capital raise, all of these securities or all of these companies do get listed and then the trading happens. So an exchange definitely plays a very, very important piece and a very, very important role in that. If you look at the genesis, India INX has a very significant portion of market share on the debt piece, right? We have more than 90% market share of whatever debt has got listed there. So we hold more than 64, 65 billion of listed debt there with about 175 or 176 issuances which are already listed with a lot of the marquee names from India which is already present there. So in a way it helps, it eases the Indian issuers also who diversify the capital raising from INR and they really want to do it an FCB or foreign currency bond, any other currency, be it USD, be it yen, be it euro or any other currency for that matter. So this entire IFSC and India INX really helps that entire journey for the Indian companies to do that. Because two things. One is the jurisdiction being far more tax efficient jurisdiction. The withholding tax is lower as compared to any other jurisdiction from a debt perspective. And also the cost of listing, the overall cost is far lower than somebody goes to the international jurisdiction like a Singapore or a Dubai to get themselves listed. So all of these are very much of an advantage for Indian companies. And if I was to look from a global company perspective, so right now we have, I guess, couple of a large Sri Lankan bank listed couple of their bonds at GIFT IFSC on India INX, one being a green bond, one being a blue bond. The key advantage from them is a visibility. See, because India today is at the center of the global, or I would say it's a well-watched economy, and people are eyeing for it. People are looking to invest in this. They are looking for the growth story here, the stability which lies here. So there are a lot of eyeballs which attracts India per se. And GIFT IFSC again is gaining a lot more traction in that sense. So some of these, at least India's neighbors, are looking to India to come and list themselves there to gain that kind of invisibility. So that tomorrow, if there's a need for them to go global and raise capital, that the companies are known because they are already visible, they are listed. So the investors do know because listing gives way to a lot of disclosures. So when the disclosures are there, the investors also are aware as to what this company is, whether it's able to service its debt and all of these things. So that really helps some of them. So today we started with Indian issuers. We have slowly expanded to our neighbors, and I'm sure it's not far when we'll have a lot more global companies coming here and raising capital, both equity as well as debt.
Yeah, right. So India INX is not just another exchange. In many ways, it represents India trying to create an international financial architecture of its own. So let's understand how that ecosystem actually works. So, sir, how is an international exchange different from a domestic Indian exchange? What changes for investors and issuers?
See, if you look at the function of an exchange, the exchange functions in a very similar way, be it a domestic exchange or an international exchange, right? Now, what differs is from a domestic and international exchanges. For example, at India INX, which is at GIFT IFSC, so only non-INR products or contracts can be traded or listed there, right? So all INR related contracts or INR related products or INR related securities will only happen in the domestic market. So when we say IFSC, it's always related to non-INR products. And at GIFT IFSC, we have about, if I'm not wrong, about 16 or 17 approved currencies which can be used to raise capital or used to be traded. So most of the known currencies are available at GIFT IFSC for doing the transaction. That's a major difference when you say a domestic and an international exchange is the currency in which it operates is very different. Domestic in India, it is only INR. And here it is all non-INR, and these 16 or 17 approved currencies which are there. What changes from an investor perspective again is from an Indian resident investor, he can invest to trading and everything from an INR perspective. Now, when it comes to the foreign currency that he can do a transaction, and he can only do it to an extent of the LRS which is available, which is the regularized remittance scheme that RBI has allowed to the extent of $250,000 in a year for an individual, right? For a resident individual, it's only $250,000 that he can invest into the global markets or take money outside the country. So that is very clear. That's number one. Indian resident investors in the domestic market can trade derivatives, but using the LRS, they cannot do any kind of transactions in derivatives. So LRS does not permit any kind of derivative transactions. The other thing that from an investor point of view changes from an international market is it basically targets a lot more non-resident Indians to really come there and do the transactions or invest or raise capital there. What advantages does it have? It's a tax efficient jurisdiction because when somebody comes and trades there, you do not have any STT available there or applicable there. You do not have any capital gains tax available there. There is no GST. And as of now, for India INX, somebody is trading derivative, the transaction cost is also nil, right? So all of them becomes a very big advantage for an NRI to come and trade in the GIFT IFSC as compared to an Indian market. But of course, Indian markets are thriving because Indian securities are here. So the NRIs would automatically prefer there. But right now we also have Sensex as derivative, which is one of the most thriving contracts globally as well on the derivative side, is also available in IFSC for somebody who wants to really come and trade. And these are the advantages if somebody wants to do derivatives in the Indian market versus the IFSC side. From an issuer perspective, of course, the withholding tax here is 20% in the domestic market. It is 9% there. But there is huge amount of liquidity that is available for an Indian issuer to come and raise here because they're all known issuers here. And when they come to the foreign shores, of course, a lot of the larger ones are easily able to get the required capital given there. And the ratings matter. A AAA year may not be a AAA on the international jurisdiction because the international rating changes. Because then you have your sovereign rating, Indian sovereign rating. So your ratings are either at par with the sovereign rating or a notch below that. So to that extent, these things differ as compared to the Indian domestic setup and the international setup. But one thing is very clear, somebody who really wants to look to diversify their balance sheet in terms of borrowings or debt, or somebody who's really looking to tap the global investor base, IFSC is a very, very good place to really come and do that. It's an international jurisdiction within India. So that's a very big advantage for somebody to really come and do that.
Yeah, so the basic difference between the exchange is the currency, right?
That is right.
Indian and non-Indian currency.
Yes.
Right.
That's a basic key difference, and whatever a little bit on the cost and the taxation aspects that is applicable
from the issuer
there.
investor perspective, they make
And predominantly the investor base here on the international side would be largely focused towards the NRI investors, and of course for the domestic investors also. At India INX, being in IFSC and international exchange, we have a kind of an 100% subsidiary called as India INX GA or India INX Global Access. So what this does is it helps investors invest in global securities market. So it could be in the US market, it could be in the markets elsewhere. So we have this offering wherein it provides access to investors across 150 stock exchanges in about 32 odd countries in 22, 23 odd currencies. So what are those instruments globally which is available? They are bonds, normal equities, ETFs, mutual funds, and derivatives, of course, but derivatives only for those who are allowed to do the derivatives. As I said, for the Indian resident individuals through the LRS route, the derivative transactions are not allowed. So what that international jurisdiction does is it does both. It's an opportunity for inbound, wherein international investors can get in the capital there, invest and do things, as well as for outbound, wherein it provides an opportunity for resident individual investors to invest into the global securities market. So we at India INX are truly trying to be an international exchange, or we are an international exchange because we have both of these things well established. Because we have been into this GA business since 2018. Of course, the regulations came last year to be a proper GAP license provider or a global access provider. We hold the license, and since the circular came in August 25 and November 25 onwards, we are holding that license. And now the framework and everything is far more in place, and the volumes there have significantly risen. The number of client onboarding has risen. That has led to a lot of interest with among the Indian domestic brokers also to offer this product to their existing Indian clients. So they are coming there, and through the GA route, they're tying up, they're providing that access to their Indian resident clients to invest in global securities market. So it's a blend of both.
So let's take a step further. How do India INX platforms and offerings strengthen GIFT City's position as a global investing and capital raising hub?
So as I said, it's what I mentioned just now, because it paves the way for both the ways, the inbound as well as outbound, so it becomes truly, international in that sense. From a capital raising perspective, as I said, it was predominantly Indians and still Indian issuers who are doing, but right now we are also seeing some offshoots in terms of our neighboring countries coming in. Equity is slowly picking up. We have seen one listing happen in GIFT IFSC very recently. Of course, it's a secondary listing, I think, so that has happened because of an MOU. But typically, the capital raising is yet to happen. But we are seeing a lot of companies who are showing interest, which are not only the Indian unlisted entities who are allowed to raise equity there, but it is also a lot of the smaller global companies who are keen on coming and raising capital there. Now, what is the advantage for somebody who's a foreign company and not an Indian registered company to come? So it helps them tap both the Indian investors as well as the global investors can definitely participate there. Because if it's a global company, Indian resident investors can participate to the extent of the LRS. So they are allowed to invest there. And global investors can anyways participate because it is an international jurisdiction. So it gives a mix of both or a blend of both these things there. So that is the key advantage for this. So that is how India INX is very uniquely positioned in GIFT IFSC as an exchange to really offer this blend.
So, in terms of the regulatory framework, how has IFSCA's unified regulatory framework enhanced the attractiveness of GIFT City?
See, as I said, the IFSCA is typically modeled like any other international financial jurisdiction, which is an unified regulator. I would like to give an example of, say, maybe MAS, which is the Monetary Authority of Singapore, which is a unified regulator. Now, if you compare it to the domestic side, you have an RBI, which governs the banks and the NBFCs. You have SEBI, which governs the capital market intermediaries. You have IRDAI, which governs the insurance companies. You have PFRDA that governs the pension. So you have about 4 different regulators. Now, in IFSCA, all of these things are merged into one. So what this does is it eases the running around for somebody because it's a one-stop shop where somebody can come, and now there's also this online SWIT portal that is available, right? So single window interface technology. So there, in anyways, it is enabled again, inaugurated by the Honorable Prime Minister, and that enables a very straight through process, seamless process. So somebody really does not have to run from one regulator to the other to get their licenses and other things approved. So you come here, you apply, and you get all of these things under one umbrella in IFSC. So that's a very, very big advantage. When we speak about ease of doing business, that's a very good thing. And since it's a common regulator, there's a lot of coordination which happens internally. So it's a very coordinated effort. Because of which, what happens, there's a particular product which needs to come out. So all of these different departments can really come together, think through, and then come out with a holistic view of regulation. So all of these things is very, very useful and very helpful. And even from a global jurisdiction perspective, when people come down and try and set up a shop there, they know that, okay, there's only one regulator that they really need to deal with. So all of these things is very helpful. So as I said, it's at par with a lot of international jurisdictions on the way it operates. So that's the model with which it is operating here as well.
No, I totally agree. I mean, having one single jurisdiction really helps. You just avoid so much of conversations and hassles. So, one area we focus heavily on DebtCircle is the fact that while India's equity markets dominate public conversation, debt markets often remain under discussed, despite being critical to the economic growth. So, I would love to shift the conversation there. India is known for its equity market, and debt markets receive far less public attention. Why is debt so important for the economy?
So two things here. So debt is not something that people on the street will speak. People on the street speak about equity, right? So today, if you ask somebody on the street, a common man on the street, they will know the prices. So they will know where a Sensex is. They will know the price. They will know Sensex kitna upar gaya, Sensex kitna niche gaya. They will know what is the price of at least Reliance, TCS, or an HDFC bank or an SBI. So all of these things is something that people will know because it's one price that defines that, right? So it's if I would say, it is percolated down to the retail to such an extent that it's more of part of a conversation today for everybody. But is debt less important? The answer to that question is no. It is equally, if not more, it is equally important that capital raising in debt happens. And it has been growing leaps and bounds on the debt side also. I think so today we have an corporate bond outstanding, if I'm not wrong, of about 55 to 59 trillion INR rupees, which has been growing. The number of issuances have been growing. The number of money raised in the capital markets year on year in the debt market has been growing from an Indian part. But debt has always been an institutional kind of a product. It has never actually percolated to the retail. But now,
Right.
of course, thanks to a lot of the regulations that came in 2021-22, wherein they allowed online bond platform providers to really allow giving access to the retail investors into the corporate debt market. So there slowly we have seen that the number increase on the retail side. But if we look at long-term capital that is needed, if we are looking for an infrastructure that needs to be built over a period of longer term, there is going to play a very, very important and a critical role. So there is no two-way that debt is not important. Debt is very, very important. Long-term nation building, long-term infrastructure building, debt capital is going to be very important. It is less spoken about, or it is not as jazzy or as easily spoken in the local parlance or among the common people, is only because they are more catering to the institutional side of the business. Because slowly retail is coming in. We have been talking about retailization of debt in India for a very long time. Thanks to the OBPPs and the effort by the regulator, I should not really be without mentioning. There's a lot of effort that's been taken by the regulator also, which is SEBI, to get this entire thing up and running. The retailization on the OBPP side, sitting, talking to the market regulators, understanding what is the need, and putting the appropriate framework in place along with the exchanges, the clearing corporations, and the market participants. And a proper framework has been put, regulations have come into place that has actually helped retailization of debt. So maybe sooner than later, you may also find debt being spoken about the way equity is spoken about. Yes, but there is some time to go. But we have taken the right steps. We are in the right direction. So you will find a lot more retail participating. There's also one reason why retails do not participate in the debt is because today, if you look at corporate debt, more than 95% is privately placed. It is not publicly issued debt. So they land up in the hands of large institutions, and they have the wherewithal to invest a few hundreds of crores into an issuance, because privately placed, the issuer also is benefiting because the cost is lower for them. They can only cater to certain set of investors that they want. They can garner the funds that they want from. So that's also one reason why you may not directly find retail participating in the primary market, because the public issuances are far fewer. It has been typically done by some of the larger NBFCs who come to the market to raise that kind of capital from the retail side. But retailization has slowly started happening. Will it reach to the level of equity? That is a long way to go. We will see that. But people are really invested, and people are looking to diversify today. It is not only equity that people are looking at, people are looking to diversify because they want to have a diversified asset allocation today. So they want to have a stable income or a steady income, which is, and fixed income, a safe fixed income security may provide. Apart from the sovereign, I would not say even a AAA, it carries its own risk, but it is the safest in terms of the ratings when we say that. So that is anyway slowly start happening. People are realizing that, and they are looking to diversify their holdings, diversify their asset allocation. So we will see that buzz happening. We are taken the right steps. So medium to long term, we will also have people wanting to invest a pie of their money into debt capital.
Yeah. So online bond platforms and public issuance of debt will definitely make a lot of difference.
Yeah, definitely it will. See, earlier also there were incentives on the tax side that were given for infrastructure bonds. So you used to have some of the larger PSU come out with those infrastructure bonds wherein tax incentives were given. So they were only public issuances. So you used to have a lot of retail money flowing into that. But that tax incentive stopped, the infrastructure bond stopped. So no more public issuances happen. And even if you look at the overall stats, more than 95% is privately placed bonds. So then retailization will be far and few on the primary side. So unless the float is higher among retail, see, because anyways, if you ask me personally, debt is an hold to maturity instrument.
Right.
It is not going to be traded as frequently as an equity would change hands. Right, so held to maturity instruments, but we will need to have retail participation in that, either through primary or through secondary, which has already started happening.
So, sir, how has Gift City changed the conversation around debt financing in India, and are investors looking at Indian debt differently today?
When I would say Indians looking at debt a little differently, there is a lot more to happen from an FPI perspective. If I was to look at some numbers as of May, on the debt side, we have been net buyers. FPIs have been net buyers in debt. Whereas on the equity, they have been net sellers. That's number one. They have not even used about 20-25% is what the limits have been utilized of FPIs actually of what is getting allotted. Right. So we'll definitely have far more participation of foreign investors into the Indian debt market. That's one. And other thing is the inclusion of Indian sovereign into the global indices. That again is a major step that happened last year. So that is going to be definitely people who will be allocating, who is investing in those indices have to allocate a portion of that weightage to India. So definitely that flow will come into the country. So definitely that is something that I'm hoping and looking forward to, that will increase the capital flow into the country's debt market. And also given where we are right now, that is people do chase yield. Right. So right now it's a phase where we are seeing an increase in the yield. The spreads are getting widened. So that will also automatically attract a lot more foreign investors to participate in the Indian debt market. So all of these things are there, and there will be a lot more participation on the Indian debt market.
So, SEBI has recently released a consultation paper on modifying the regulatory framework for online bond platform providers, particularly in terms of permitting IFSCA regulated products and advancing ease of doing business in the bond market. What are your views on this?
It is an excellent move as per me, because as I said, online bond platforms did take the bonds to the hands of the retailers, into the hands of the retailers, and making it extremely easy by doing it with the click of a button, with all the necessary safeguards put in the MIIs and the regulators by the exchanges and the regulators. All of these things in place. And now it's only fair that the Indian investors also get a chance to diversify their holding, hold some of the good global bonds, and this paves a good way, and it's a very good channel through which it is happening, because IFSC is an international jurisdiction. When it happens to the right channel, there's a lot of trust which is also built in among the Indian investors, saying that okay, we're investing global bonds, we're going through the right channel, because there it's an international jurisdiction. It has a regulator. It is going through an exchange. So when it goes through an exchange, again an MII, which is again highly regulated, and the name which is known, because as I said, India INX parent is BSE. So there's a lot of trust which is associated. So that's going to happen. And today, even when I say for all IFSC related products, it is not only for all the bonds which are listed on the IFSC exchanges, say India INX, but it also, because they have also the consultation paper mentions about IFSA regulated products, services, and securities. Also, they can invest into the bonds in the global side through the GA route. So that is also something that will help the Indian investors to diversify the portfolio. And this also gives an OBPPs an opportunity to expand their offering bigger. And this also actually is good, because if OBPPs are allowed, a lot of NRI investors, right? So they can also offer the NRI investors the Indian foreign currency bonds which are listed in IFSC.
Okay.
So there are many. So as I said, 175 ISNs are listed there. So it also allows the OBPPs to offer this to their NRI investors to invest in marquee Indian issuers who have listed their foreign currency bond on the exchange platform. So then it actually helps in two ways for the investors, the OBPPs, and IFSC. One is investors get a broader product offering. OBPPs are able to tap a wide more, or offer a lot more securities, or a broader set of markets to their investors. IFSC is able to, through the OBPP route, tap in a lot more NRI investors, which is already present with them. So all of these things are good. It helps in the growth of everybody, right? It helps everybody to enjoy and diversify their holdings, expand their offerings, as well as it helps the growth of IFSC as well.
Right. So trust plays definitely a very important role, plus international jurisdiction, the right channel, and getting access to Indian foreign currency bonds. So that brings us to an interesting point. How do you see India INX evolving as a preferred platform for cross-border debt finance fundraising in the years ahead? What makes it interesting, increasingly attractive to global issuers?
So two, three things very clearly. One, we are actually, given that we hold significant amount of, or we hold the majority of the market share, which is plus 90%.
Yeah.
We are anyways the preferred platform for global fundraising. Number one. Number two is we have some kind of MOUs which we have signed with Taiwan Stock Exchange, with Afrinex, and also we have an MOU with Luxembourg Stock Exchange with respect to the green bonds. Right, we are seeing how we extend that MOU to other asset classes as well. So anyways, there is anyways cross-border collaboration with other exchanges anyways, which is happening. So eventually going forward, we'll also see how we are able to leverage each other's strengths on seeing, securities listed here, securities available in the global exchange, and global exchange securities being listed here. So that's one of the areas, be it debt, be it equity, or be it any other product in terms of, could be ETFs as well, where we could look to expand this entire offering from an cross-border collaboration also. And we are also speaking to other similarly global exchanges to see how we could get into some kind of an MOU for some of this, cross-border listings and, cross-border capital raising perspective. Again, as I said, given IFSCs and jurisdiction, international jurisdiction within Indian mainland, it automatically attracts, global investors as well as global issuers here, because when they come and raise capital here, they not only make themselves available to the global investors but also to the Indian investors. So that's a very big advantage. And Indian investors are today looking to really diversify their holdings. So it plays a very big advantage, because you would see, most of the IPOs that have come in the last 2 years have got completely oversubscribed. So which means Indians are looking to invest, Indians are looking to diversify, Indians have got enough liquidity. So they want to now look into global shores as well. And all of these companies would want to raise capital or look to raise capital. IFSC will be a good place to do that, because then they are able to tap the overall liquidity pool which is available, and overall kind of an share of pie of capital which is available across the globe, because it gets the best of both worlds. Indians through their LRS, and global investors anyways can participate in IFSC.
Right.
So all of these things are a good combination. And I initially, as I said, being an exchange, we do play a very, very important role in all of these activities.
Yeah. Another major shift in global finance today is ESG and sustainable capital. And while the opportunity is massive, so is the skepticism around it. So, ESG investing has grown rapidly worldwide, but many people also see it as branding. How do you view that debate? Is it becoming just a checkbox exercise?
See, not really, and it really would depend upon how somebody really views it. See, to me, with all of the, apart from, the investment that we would look at, the changes in the our environment which is happening, the changes in the climate which we are undergoing, the changes in the environmental, the social well-being, which is social infrastructure which is really happening. So it is going to be really important for each company to really look at, how socially, economically, environmentally they are going to be responsible for it, right? So for them to raise this kind of an capital under the ESG framework and invest in ESG related activities is going to be very, very important, right? So globally it is happening. I would not really put it at saying that, somebody is really trying to do a branding out of the ESG. No, I think so. Whoever is wanting to come there and do that are quite serious about doing that, because in IFSC also we have got about 15 billion of ESG related securities which has got listed. Now we have also the transition bonds framework which has come. So all of these things are getting steam. There's a lot of discussions which is happening. So I think so the issuers are really serious of, and the investors are also equally serious, because with ESG comes disclosures. So if I'm only doing for branding, right, I may do it for the first time. But second time I will not be able to do it, because my disclosures itself will make it very clear that, okay, I have raised it for ESG, but my disclosures show something else. Am I really utilize it for the purpose where it has got raised? Am I actually using it in the cause where it is supposed to go? What is the proportion? Where is the project? How it is going? So all of these are disclosures which are being mandated, be it in IFSC, be it as part of the Indian domestic market or globally. So it just, see, even if it's a branding exercise, it can only work once. It cannot work the second time, because it's a listed instrument. All the disclosures need to be there, and investors are very, very well informed today. They invest with their eyes open, so they are very careful about where they are investing and what they are investing for. So I'm sure this is something that which will catch steam, which will pick up. But yes, of course, it has its own set of debates, discussions, which keeps going on in terms of what are those things that really needs to be done for it to really pick up and catch steam. So that's my take on this part of this thing. It's a serious business. It's not something that somebody can do it for branding, just alone for branding.
I agree. So, and finally, I want to zoom out and talk about the bigger picture, because building a global financial center is a long term ambition. What are the key promising plans for Gift City and priorities on India INX roadmap?
See, so definitely, I would put it as clearly three things. One is capital raising, which is the dream of our Honorable Prime Minister. So debt, we are there. It is picking up well. We are doing well. The other important thing is going to be equity. How are we going to channelize equity capital raising there? Of course, given some of the geopolitical crisis, we may see a slight delay of a few months here and there, but I think so it is there to stay, and it will pick up. So that's going to be a really an area of focus for us, which is the capital raising, which could be ESG debt, normal debt, as well as equity fundraising. So that's very clearly one of our area of focus, because equity is very important for the ecosystem to really develop and grow, and even from an exchange perspective, right? Because that is where the actual trading happens. That's where the secondary market will be happening. That will where things will start thriving. And even for the gift as a whole ecosystem, equity listing is going to be very important. So that's also going to be one of our key focus area. Since I'm there, the other thing is also going to be the growth of our derivatives market. How are we going to grow our derivatives market, which is Sensex, for the international audience as well? So that's going to be a very clear growth path for us in the short to medium term, as to how are we going to take it leaps and bounds, because we have a very clear advantage of the product being in demand among the Indian domestic investors and FPI. So it is just about seeing how we are able to take it further to the international investors and see how they can invest there. So that is another thing. The third area, and of course, on the exchange side also, the other key idea is to see how are we able to get in more new products for the capital markets, because it's not only the equity, because equity it will start and it's a focus, but it will take time to grow. So we need to have listings that will happen, right? So we cannot have 100, 200 listings in 1 year, right? It will slowly begin. So it will begin with 2, 3, 5, 10, and then grow exponentially. But in the meantime, what are the products that we could offer to our members, right? So we're also working on, say, to see how we can get some of the ETFs listed. So we're working with a lot of gift-based fund management entities who are planning to come out with ETFs. So to see how we can get those ETFs listed, which could be both inbound and outbound, and also trying to see if we can work with some of the global mutual funds to see if they could list their ETFs onto the gift IFSC exchanges, is a good. So definitely, working on new products. And thirdly, very clear is on the GAP model, which is a global access provider model. There we feel, there's a lot of potential and growth that can take place, because the reason being that, to me, that can ramp up also very quickly, because we have a lot of investors which are Indian investors as a base. We have got good relationship with the brokers, given that, BSE is our parent, so there's a lot of trust. So all of these things can be leveraged, and gap can be grown very fast. So these are very clearly the three focus areas for us to really ramp up ourselves and take ourselves to the next level.
So, coming to our last question, if we revisit this conversation 10 years from now, what would success for Gift City look like to you?
So I have been always a firm believer that for gift to success, the ecosystem has to grow. When I say ecosystem has to grow, all of the people who are there, the each of the entities need to thrive and they need to grow. And I'm sure that the ecosystem is already built. We already have two exchanges, we have two clearing corporations, we have a depository, we have two rating agencies, we have about 30 plus odd banks, more than 50% are international banks. So that now the key is, with the fund business is growing, the key would be how is the capital market business going to grow? What is the going to number of products that's going to be launched there? What is the number of equities that are going to get? Companies are going to come and raise capital that are listed there. So all of these things would typically be 10 years down the line. I would not say success or not a success. But what I would say is that if this keeps growing, if what we are envisaging today, or what are those plans that we have put out today, if there is growth which happens year on year, and it keeps growing exponentially over the period of next 10 years, then I think so we are there for a long term, right? Because then it becomes that we are able to also realize whatever we are dreaming about, retaining global capital, getting in global investments here. So this is something that we look forward to. And I'm sure, if I was to compare myself, gift IFSC with other jurisdictions, it is just 6 years old or 5.5 years old that this jurisdiction has come up. That is with IFSCA coming in as a primary regulator. 2 years take it away for COVID. So we are only about 3.5, 4 years. Into that, we have done extremely well. We have got 30 plus odd banks, we have got 300 plus funds that are set up, we have got two exchanges, we have got depositories, everybody is there. It's a thriving debt market. It's got 68 plus billion of debt which has got listed. You have got ESG bonds worth 15 billion listed. Equity regulations are out. Equity is willing to happen. Derivatives are doing well. So all of these things are good. So we have achieved so much in 3.5, 4 years. And I think so going forward, the growth of what is existing and the new products that can be launched and that will be launched is going to be how I would look at this entire game to see the growth.
Yeah, with majority market share, with capital raising, growth in derivatives
Yeah.
market, cap model.
Yeah, so
I
I
think all
would,
these things will add.
yes, I would also say that, see, because the globe is world is shrinking,
Yeah.
right? The world is shrinking, and capital raise needs to be
Hmm.
as seamless as possible, whether I do it out of
Hmm.
India, gift, or any other place, right? Because the investors and the global thinking because of technology. And as India, we have got great technology with us, be it the payment platforms, be it our settlement systems on the capital market. We are phenomenal from a technology perspective. So we stand in very good stead to really see and compete very fairly and very competitively with other international jurisdictions. See, because it's always going to be that we are going to feed off each other.
Right.
It's not going to be that, if one survives, the other is going to die. It's not going to be that. It's going to be that we are all going to live in a very competitive environment and feed off each other. That's going to be the key that I would put it as.
Mr. Krishnamurthy, thank you so much for joining us and giving us your precious time. This was a deeply insightful conversation on where India's financial ecosystem is heading and how Gift City and India INX are helping shape the future. And to everyone listening, thank you for tuning into Debt Circle. We will see you in the next episode. Thank you.